Lekana la join, lekana ke le emetse mo meeting, guys, please. You can join.
You guys can just continue without me for now, but then I'll be big if you guys aren't finished.
Okay, Hope. As I was saying, right? I agree. We know that okay, like we use an order block as our entry and we use it also as our exit zone, right? So Fana, I would use it as an exit for me in the market, right? So, okay, let me just show you typical examples of how I would enter, how I would trade using order blocks, right? So I showed you an example of a buying order block, right? Let me show you examples of selling ones. Okay, selling ones likewise, okay, the last up candle. Okay. Then followed by a huge sell. It's like a footprint. Uh, Everyone's sorry, hey man, that behemoth, that Bigfoot, o gatile kwala, that elephant, that big elephant, let's go India, you know, they were in a kiddie pool. The water was displaced, something like that, or red. So, I agree we know, hore, market usually it's going to retrace kwale. Then do what? Start selling. Gonna look for a young pattern yana, the candlestick confirmation. So di re bolelang gore we want to start selling. So this is how I would use an order block to enter. And my stop loss is usually above the order block. My stop loss is usually above the order block. So, okay, let's look for one star sale, right? Okay, there was a market that was selling nicely this few months. Gold. I can check gold because the name is allowed here this few months. Uh, Okay, okay, okay. Uh, Okay, let me just delete everything. Remove drawings. Okay, I'll start by actually going through the higher time frames, which is a weekly chart. But let me just go through the monthly because you're on like the biggest, highest time frame, right? So we can clearly see Jorge, gold, it has a psychological area where every time if you come this level, good like yeah, say like, it's our psychological area where like the institutions they know for the once market if you come uh 1920 to 2000 somewhere there that range from 1900 to 2000 the price of gold it's a psychological area where market e batla go selang teng. Let's see ka 2011 that was a psychological area where gold was selling for years for 5 years actually then it was in a range for the next five as well. 2020 the pandemic gold started buying yeah so I just want to show you going on a weekly an example of an order block okay on a weekly chart like an order block I say like this is our last up candle before these sells right template OB order block yeah that is our order block okay a rule of thumb is that where the order block is, just look for a pattern, like a candlestick formation, like fun. This is a beautiful reversal candlestick pattern. It's a beautiful reversal candlestick pattern. Okay, it's a kind of a inverse hammer. It's an inverse hammer. This one. It's an inverse hammer. Mm, yeah, it's an inverse hammer where the market after your then more we had an engulfing, a bearish engulfing as well. Candlestick confirmation, meaning what after this candles, yeah, sell. So yeah. Likewise, your that engulfing candle, we can use it as an order block because it's the last up candle before this sell. Like, okay, let's go on a daily. Let's go on the daily chart. So what I like about the daily chart is that we can refine it. We can never we can refine it. Let me cancel this. We can refine it. Kana since it's an amole, clearly selling patterns. Let's refine it again. Go on a 4 hour. Hey, my network here simul. Okay, but gear sharp. And this is the still inside that order block. Daily. It's still within it. So just to refine it properly, I know where we are inside that order block, right? So now to refine it properly, I'll just go up here. Okay, this last up candle, because 4 hour time frame, better to trade, So it's a nice trading time frame. Confluences, we're using our another tool, liquidity. I got since we saw price equilibrate the last up candle. Okay, we would sell fine. We would take a loss. Because you want it just above. We take a loss. We would take a loss. We would get stopped out, right? We get stopped out. We would get stopped out first, right? But we shouldn't be discouraged. We shouldn't be discouraged. Rabon, okay. Market formed another last up candle. Now we enter here, right? Just above Nuyana, this small wick. That's our stop loss. We have a 30 pip stop loss. And we're aiming for what? For these lows, I got. We would make 60 pips. Risk to reward of 1:2, I got. But since we trade on a daily time frame, we know okay, market though. Remember, we must remember also our internal and external range liquidities. Yeah. So we know the market is likely to come down here in the long run, right? Kana unkabare holder for the matsatsi a mantsi, the bake and all that. It takes a strong psychological King, it's a strong psychological skill because you're going to see the money floating up and down, up and down, up and down, up and down, and like nka ba rweseng, hey, na ke kgotsofetse ke bone 1,000 rand, ke bone 2,000 rand, e re ke tseye tšhelete yaka wa bona, and gape these pullback o bona tšhelete ya gago e boela ko morago wa bona. So we know that, okay, since we have a 30 pip stop loss, our target is actually going to be how many? 227 pips, you know? That's our target. Likewise, there's a way you can enter more trades scaling in. Can enter more trades by scaling in. Was it's trending to the downside, right? Marina wa tlo bolela maka nna nka be ke shebile fana. This would be my entry because I wouldn't want to say to guess and say, hey, market out similar salamol, that's why we'll enter. But since Mona SAT, then it came one time, two time, three time. I know it created a strong zone where the market is likely to sell. Then it went down. So now, as I said, this is where I would sell. Personally, this is where I would sell. I wouldn't sell here. Now it's sell calf. Yeah, this is where I would sell. And I know since okay, it created something new. Remember internal? I get. Even let's just use this one, external. Okay. Internal, you hit your target, right? External, class, I get. Wow, that's beautiful. That's a beautiful trade. So Fana, this would be a risk to reward of 1:6.8. You are risking 10, you are risking 10 pips to make a whopping 74 pips, 74.2 pips. One. Yeah. So that's what I use, man. Those are actually like that's literally my trading strategy in a nutshell. I don't have many things. I don't complicate it. I don't add so many things. I just use things that I know for Bereka, and it's easier for me to understand. It's easier for me to trade. But the most important thing that we should always stress about is money management, risk management, and trading psychology. Because what I showed you over the past 2 days, like that's literally like I would say 30% of what you need to be a profitable trader. That's actually 30%. The thing that actually that makes you profitable, sorry, that makes you profitable in the long run, it's your risk management. Your your risk to reward. Wa recall ntho ene re ira maabane bosigo ele ya for hypothetically speaking, we had 100 rands in our accounts or like $100 in our accounts. Do you still remember that exercise?
Yeah.
Yeah, like that's the secret sauce. I won't lie, like that's the secret. A lot of people we tend to not go into it too much, because that's actually what makes you stay in the game for the long run. Because just imagine, let's say you start your account for a realistic expectation. You put 500 rands in your account. That's the money that you can afford to put in the market. Maybe let's say we're saving for like 2-3 weeks from allowance that you get from for your family, or like you have a job and you know, okay, man, I have a part-time job. I'm working weekends, maybe go a supermarket or somewhere. Then you know, okay, they pay you like 1,000 rand for those hours that you worked, right? So you know, okay, like you need to spend money on yourself, buy data, buy something. I don't know, I don't know what ladies buy. Maybe you need to buy hair or something. But so it's okay. I have 500 rand that I'm willing to invest in my trading. So that 500 rand, okay, like that's the amount that you start off with. That's your opening balance. Like this is your opening balance. That 500 rand, right? So okay, in the market, like I know I'm not gonna win all the time. I'm not gonna win all the time. There's going to be losses as well. You're being realistic at the time. So the thing is, you must have a risk of ruin. Like you must calculate your risk. Oh man, how many trades will it take for me to lose this account if I'm going to risk 50 rands all the time? I want so simple exercise fail or okay on your phone, on your calculator, 500 divided by 50. You have 10 trades, you have 10 50 rands. Okay, 50 50 rands. I got 50 rands. That's what you risk. Like that's your risk, right? You are risking 50 rands, right? So in those 50 rands, every time for you to have to lose your account, you're going to lose 10 times. You're going to lose 10 times. 1, 2, 3, 4, 5. Yeah, give that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you have 10 trades that it's your risk of ruin. For you to go flat broke, flat losing your account, 10 trades, you are done. You are done. You are done in 10 trades. But with your risk to reward ratio, let's say you use 1:3, right? You're using a risk to reward of 1:3, right? Why is for example, okay, you're risking this one, Fana, okay, it's a loss, right? This one, it was a loss. The first trade was a loss. The first trade was a loss, meaning it's gone. That money is gone, right? But the second trade, it's a win. You put a risk, but you gain Nuyan. You gained how much? You gained 150 from your investment of 50 rand. You are plus, you are up 150 rands. You are up 150 rand. You're up 150 rand. Your money, I gotta lose this was a minus 50. I get your balance got that loss. You have an equity of 450. I get hey, 450. I get that is your opening balance in the next day, right? In the next trade, maybe after 2 days or something like that, right? Now you won 150 rand. So okay, since ke winne 50 rand 150 agar ke riskile 50 rand why is okay 450 plus 150 you are up 600 rand agar no yan your balance opening balance in the new term in the new trade is how much is 600 rands agar okay fana you have 600 rand now awan agar now let's say you win again agar you win again using same risk you're risking 50 agar this is your risk you are risking 50 agar to make how much to make 150 then market of ile 150 randa yefana so no yana you had 600 rand opening balance right at the end of the day you closed 150 rands profit meaning for 600 plus 150 you have a new balance yabo kai 750 750 awan so from 500 how much did you make now you know you must say okay 750 minus 500 you made a profit of 250 in how many trades you took only two again 3 trades you took 3 trades and you're up 250 already one using a beautiful risk to reward ratio one let's say then the next 3 trades you are losing them one risk this one then this one then this one okay you lost 150 rands right but still no yana or 750 minus 150 you're still up because no yana your balance is still 600 rand from your initial investment you are still up then god willing you win the next 1 2 3 4 5 out 5 let's say you win the next 5 trades you are in a winning streak right things are going your way things are going well Kana each is 150 rands, right? Your win using a risk to reward of 1:3, right? 150 times 5. You're going to have a profit of 750 rands. One so rare 750 plus 600. Your balance at the end is going to be 1,350. After winning all those trades. At the end, your closing balance is going to be 1,350. Let's minus your initial investment. 1,350 minus 500. It 850. Now tell me, isn't that actually growing wealth? Isn't that compounding your wealth? Like at the end, you're going to have a profit of 850. Let's say you close the month. In that whole month, you only traded 10 trades. Like you are not aggressive, you're not going in every single day, but you are just, looking for your setup. If it's if you but you lost the opportunity, it's fine. But in the long run, you are going to make money. Isn't 850 a lot of money for your investment of 500? That's more than 100% profit, you know?
Okay, can I ask,
Yeah.
would you recommend trading in other currencies like as a beginner? Like say I want to trade in like USD.
Yeah, yeah. It's gonna even a sharp it's got it. I don't want to lie. Not for me. I don't know. I like using the rand because it's easier for me to see what am I losing, what am I gaining, right? For me personally, I don't know about other people,
Mm.
but not for that's why I use the rand as a currency fella, just the fella. But it's when I started, I used to use dollar. You know, the just funding dollars. That's what I used to do. Gape,
Okay.
e monate ka gore e reduce this thing of saying gore, hey, man, I'm losing 200 rand, I'm losing 300 rand, or I'm losing 2,000. But
Yeah.
yeah. And also, speaking of this one, this was money management, that one, for with a bit of risk management. So, ntho e botlhokwa ke gore, when you trade, ne, use lot size A sharp because do you understand what lot size is?
Yeah.
Yeah, okay, so there's something that you must know. Okay, this is something that I picked up on the internet that 0.01 per pip equals to in dollars ke 0.10 cents, right? 0.02 per pip is 20 cents. One 0.03 per pip is 30 cents. I get 0.04 per pip is how much is 40 cents. I get 0.05 per pip is 50 cents. Likewise, each one really give 50 cents. I get then 0.06 in dollars is 60 cents per pip. Then 0.07 is 70 cents per pip. Then 0.08, so on and so on, is 80 cents, right? Now it gets interesting when we come to 0.010 kwale, on and a dollar per pip. Then even 0.10 equals to $1. So this is what I picked up on the internet. So the thing is, when we trade, I get, let's say, refine, I get, Shapo, let me see, Fabukai. We had a 6.7 pip stop loss to make, let me be realistic, Baba. 1:3, yeah, other 1:3, I guess. So we had a 6.7 pip stop loss. Our target was 20.7 pips, I got. So to calculate my risk, I'm going to say, since maybe let's say I'm going to use 0.02, right? I'm gonna say 6 pips times 20 cent, 0.20. I'm going to risk $1 and 20 cents. That's going to be my risk. I want $1.20 cents. That is going to be my risk. My reward, 20 pips. So kare 20 kare 20 20.7 times 20 cents. I want 0. A reward of $4.14. I want. So that's how actually risk to reward ratio works. I want. And followed with money management and risk management. Because in the long run, you're going to compound your wealth and you're going to grow your wealth, you know. Because you growing, you're compounding your wealth, ne? Then wa bona okay. Cheltaka in yan. For example, usimutaka wana 500 rand. Let's say in, I don't know, maybe 6 months, right? Your account it was 8,000 rands. Then from 8,000 rand, kwali, okay, I'm risking now. I'm going now, yeah. Let's say you're gonna take a big risk move. You're gonna say, okay, let me risk 20% of my account on a single trade. Ngabo calculate, okay, how much is it going to risk me? What 8,000 rand times by 20%. It's going to be 1,600 rand risk. Using the same model, 1:3. Why is it okay? If I'm risking 1,600 rand, okay, times it by 3, you're going to make a profit of 4,800 rand. So like that's in the long run, like when you grow in your trading, when you're comfortable with risk, when you're comfortable with your method and your style of trading, in the long run, you're going to make money, you're going to make massive wealth, you're going to make exponential wealth, compoundedly so. And the thing is, we tend to forget this thing of risk management. Likewise, when you take a big loss, just scale down your risk. Scale down your risk. Instead of using Noyana 0.05, instead of using 0.05, scale down your risks. Go to decimals lower. Use 0.03. Because why is okay? Fine, I'm going to risk less, but my profit at least is going to cover my losses. I hope that made sense. I hope that made sense a bit. Because this one,
Yeah.
yeah, because a lot of people, when they teach people, they never go into risk management. They hardly touch it as a subject. And I won't lie.
Mm.
I got a 50%. Let's say 50% of your trading journey, hey, you're gonna go back and forth with risk management. If you don't catch it now in the beginning, because I won't lie, now it took me literally years to actually know what, hey man, for you to be long in the game, not to fund your money all the time. Hey, risk management is important. Risk management, money management. It's like, hey Joe, it's like the backbone of you making money in the market. I want the technicals are there, a style of trading is there, but the risk management element, the you keeping the money, you growing the money, that's the key. That's the key of you growing wealth long term in the market. But I hope you got everything today. I hope this was
Yeah.
a very cool lesson for you, and I hope that you will apply it in your trading journey. Because I noticed one thing, when ladies learn to trade, Ejo, like I won't lie, you guys master trading. It's like you guys were you were wired to be traders. Because Rona is jitters, ne? Ejo, it's like our ego, our pride, this thing of I want more, I want more, I want more. better. I want, for example, okay, I have 500 rands in my account. Out of nowhere, I'm risking literally 80% or 70% of my account in one single trade. The home run, the Hail Mary, that one trade is going to make us a lot of money. And to be honest, is unrealistic expectation. You are stress testing your trade, your balance, your account. Because a lot of people okay, mara motho a ke tlhaloganye man. Why motho a butse lot size tse ditona na mo accounting e nyane. O bona motho okay, o tsentse yone 500 rand, but he opened like di trade tse dintsi ka nako e one, and gape okay, he's floating a lot of money, but in the long run, it's not something that you can make wealth with it. It's something that it's like you are gambling. It's like you want quick, instant money, and it's a journey, it's a process, and we tend to forget that as people. Other than ladies, I won't lie. Ladies, when they go into this, they go into this thing with discipline, with a plan. They go into this thing knowing, okay, man, when I'm doing this, it's like I'm planning for the future. I'm planning for growing this account. I'm planning for knowing, okay, this investment that I put in is how long is it going to take me? And I know eventually I'll get there. Ladies think in long term. Oh, na ka naganetse no gore na ke baka 2,000 eo, ke baka 5,000 eo. O tsentse 500 rand. We baka like in 3 days, 4 days. It's unrealistic. So one thing about the ladies, you guys, I ke itse gore le kgona yang, psychological na yang, but hey, you guys are strong when it comes to actually knowing how to profit long term in the market. I like a master, right? Like I'm a cool man.
Okay, one last question, ne? How much of your total capital should you like risk, like the maximum?
Yo, it's a makawe motho, but now I would advise like, hey Joe, just be realistic, because depending on how much you put in, like let's say you put in your 500 rand. So that's why I was saying 50 rand. Like, so I got 50 divided by 500 times it is 10%. But if you are risking 50 rands or 500, it's 10%. Like, so now I would advise you just check your balance, your account balance. If you have like an account, you are 500, 10% is enough. 10% is a good risk. But when you have a bigger account, let's say you have 5,000 rand in your account, risk lower, risk 5%. But if like you are comfortable with risk, meaning that let's say you've made money in the market, you've withdrew money. Let's say let's say you made this 850 rand profit, right? Then you withdrew that money, you are left with 500 rand back in the account. Now you can risk like 20%, because okay, I still have something in my bank account where if everything goes wrong, you lose, then you can still fund again. But the aim is just to risk less. But I would say a rule of thumb is risk 10% of your account. That's a rule of thumb.
Okay, thank you.
Nah, thank you for the day. Thank you for availing yourself, and I appreciate that you took the time to listen to what I had to say.
Pleasure. Bye,
Yeah. Nah, I'm gonna end the meeting now.
Okay.
Bye bye.
Bye.